Thank you for joining us this Friday, the 28th of November. I'm Sophia Mavridis with Bell Direct, and this is a weekly market update. Well, if you've been watching the US markets lately, you may be asking, is this rally sustainable or is it running on fumes? Well, the Q3 2025 reporting season has ended strong, with companies delivering on strong profits. This solid earnings performance is acting as a safety net for the US equity market right now. In the third quarter, a massive 83% of the S&P 500 companies beat their earnings forecasts. Before the season started, analysts were expecting earnings growth of about 7.9%. The reality was that the growth surged to 13.4%. And because of this, analysts are now upgrading their profit forecast for the rest of 2025 and into 2026. However, we're seeing that valuations are high, meaning the market is expensive and investors are being selective. Now, this brings us to artificial intelligence. Big tech is spending historic amounts of money on AI, while the market is starting to ask, what is the return? Now, Amazon rallied after showing that their AI spending is making money through their cloud business. Nvidia also crushed expectations, proving the demand for chips is nowhere near slowing down. Yet on the flip side, Meta and Microsoft declined because they were spending billions on AI infrastructure, but investors aren't seeing the immediate revenue boost to justify the cost. Meanwhile, the financial sector was also a standout performer this quarter. Banks like Morgan Stanley and Goldman Sachs posted results that beat expectations, driven by a resurgence in deal-making and investment banking fees. Now, Bell Potter remains constructive on the medium term. They believe the AI productivity boom will support earnings for years to come. However, watch out for short-term volatility. The Federal Reserve's interest rate decisions are still causing market jitters, and if we get a market correction or a dip, the strategy is to view it as a buying opportunity. Now, looking at the local markets performance this week so far, the ASX 200 gained 0.76% Monday to Thursday, with healthcare and technology in the lead, advancing 4.19% and 3.92% respectively. Meanwhile, the energy sector was down the most, 3.2% in the red. Now, on the ASX 200 leaderboard, Catapult Sports, that's CAT, advanced the most. Now, Bell Potter this week retained their buy rating on the sports technology company's shares with a lowered price target of $6.50. Now, they said that Catapult released its half-year results last week and delivered earnings ahead of both guidance and Bell Potter's expectations. This was driven by higher-than-expected margins. Now, Bell Potter sees potential for strong double-digit growth in the core business and believes that it will be augmented by the cross-sell opportunities. Now, meanwhile, Temple & Webster, that's TPW, declined the most, down 25.35% this week so far, following a FY26 trading update. As for the most traded stocks by Bell Direct clients, these were Mayfield Group Holdings, EML Payments, Electro-Optic Systems, CSL, and Phineas Corporation. Clients also bought into Combank, Drone Shield, and WiseTech Global, while took profits from ANZ and BHP. And the most traded ETFs were the iShares S&P 500 ETF, that's IVV, the BetaShares Australian High Interest Cash ETF, that's AAA, and the Vanguard Australian Shares High Yield ETF, that's VHY. And to end on economic news items to watch out for next week, well, on Monday, the S&P Global Manufacturing final PMI for November will be released, and it's expected to show an expansion from the month prior. On Wednesday, the GDP growth rate will be released for Q3, and on Friday, our balance of trade data for October will be out. That's all for this week. I'm Sophia Mavridis with Bell Direct. I hope you have a great day, and as always, happy trading.